Why do you think, folks, why do you think that they're talking about the ETF market being highly efficient? What a surprise! Citadel Securities is pissed. Well, of course they're pissed, because they're gonna lose a crap load of money. An ETF is a basket, okay? Imagine this cup, it's a basket. Well, right now it's a cup of coffee, but it's a basket of stuff. It's a basket, that's all an ETF is, okay? This basket has a value. Let's say I put a $100 stock in it called this Sharpie pen. And then I put a $50 stock in it called this Sharpie pen. The value of the basket is what? $150, because it's got a $100 stock and a $50 stock in it. How often does the market tell you the value of this cup? For an ETF, once a day. Once a day, that's it. An ETF adjusts to what's called net asset value just once a day. But wait a minute, Kevin, what happens if during the day, this $150 basket, let's assume the components are still worth $150. The stocks are moving. Say it's like Nvidia and Apple, let's just say, okay? But somebody comes in and buys the ETF like hardcore, and the value of the ETF goes up to 154. Well, Citadel's gonna go, that cup is trading for $154, but the components are only worth $150. So if they market make in this ETF, they sell. They sell it, they break it, and they capture the $4 profit. The same happens in reverse. The bucket's selling for $145. They're like, well, the components are worth $150. Sell the ETF, break the bucket, take the components out, and you have $150 that you bought for $145. They can do that all day long because the value of an ETF only resets to NAV or net asset value once a day, which means the market makers can make a shitload of money, hand over fist, trading ETF products that only trade when the market is open, so not on weekends and not on nights. This is why you see major fluctuation in ETF prices in after market hours or just low liquidity stocks.